Let's look at what the spread is between treasuries and bunds right now, 214 basis points. Dan, does that go below 200 basis points? And if so, what would be the effect?
Well, we think it will go that below 200 basis points. I mean, the effect should be negative for the dollar. Most of the models that we have, are based on interest rate differentials, usually more on the front end than the bund T-note spread that you mentioned. However, the dollar has been trading rich to rate differentials versus the euro for a while. That may reflect some kind of uncertainty relating to trade relations between the U.S. and Europe. Brexit obviously has been part of it. We're learning more and more over the past few weeks how important Brexit has been for the euro-USD exchange rate. These are things that it's hard for models to really incorporate. They're kind of new. Models are based on what's happened in the past. So I think the market struggles a bit to price them.
Let's talk a little bit about Brexit. Where do you expect the pound to go near term? People are talking about 135. Would it be capped around 135? Because there is still significant uncertainty about the long-term relationship between the UK and the EU.
Oh, definitely. I mean, when we did our estimates of what would be fair value under anything other than a no-deal Brexit type situation, we came up with numbers around 133 in cable, and certainly 135 is within range. It seemed very far away just a few weeks ago, but that's a reasonable target if the uncertainty gets locked down further. For example, if the votes go in favor of the Prime Minister today that you were talking about earlier, that's a reasonable target.